Hey, good afternoon, everyone. Futures Brizio here, just afternoon on Friday, February 2nd. Hope everybody's having a good day and good end of the week. And just a quick market review of what's happened so far today. So this morning, this is the NASDAQ, and here's the S&P. So we had non-farm payroll, which is the big monthly jobs report that comes out here in the U.S., if you don't know, and it came out much better than expected, and you can take that with a grain of salt. I think they're massaging the numbers. We are in an election year here in the U.S., but regardless, the print is the print, and that's what the market goes by. And so it was a very hot market in terms of the number of jobs created. Average hourly earnings was up. The unemployment rate ticked down, and they even adjusted last month's number up a little bit. So the market took that as very hot. So initially coming out of the print, we saw the indices sell off, and that's because the Federal Reserve Chair, Jerome Powell, on Wednesday we had the FOMC. They left rates alone, and then Jerome Powell was speaking and was like, well, whether we have a rate cut in March is probably going to depend on the jobs report. And since the job report came out so strong, the market took that as a negative that they would not cut rates in March with a hot job market. And so, of course, that's negative for the stock market because if interest rates are higher, it's, basically it's less investment in the stocks, because companies maybe can't expand and grow because they have to pay higher borrowing costs, and also it flows money into the U.S. dollar and away from stocks because the dollar becomes more attractive with higher interest rates. So initially when we saw that, this candle right here, this big bearish candle, was the 8:30 to 9 a.m. candle. So this is right when the news came out until 9 o'clock Eastern time. And you can see price fell and then bottomed out pretty quickly. Now this is a pretty big drop, I'll give you that, but it wasn't sustained, as you can see. We dropped for half an hour, then we chopped around for about another hour, tried to make a new low here, and then snapped right up, and now we've come all the way back and have taken out these this pre-market range up here. So I do suspect we'll probably start to see price slow down. It is Friday afternoon now, but we probably will kind of trudge a little bit higher, but I think things will probably start to die out. You can see the candles are getting smaller as we go, and we're getting to the top of these ranges. So a lot of people will just bail out for the weekend. So the NASDAQ and the S&P are pretty much the exact same story. And, if we go out to a higher time frame, you can see, we just keep chugging higher. This is the 200 period moving average, just holding price up, other than this little excursion back here in, I guess this is probably late December, early January, when we temporarily, this is the beginning of the year, for, what is this, a day or so where price, went down below the 200, and then we snapped right back after that and put it back above. So we had this little tiny, this is probably about 1 day of price action, and then snapped right back, and we've been back up. We tried to come down again, and then just, for another day chopped around just below, but there was nothing sustained here. And then price has just been rallying and tearing back to the upside since then. With just these regular pullbacks. So, it is what it is, right? It's just, that's what the market interprets, and you can make whatever comment you want about the fundamentals, but that's how the traders that are making the price move see it, and so that's reality. So, regardless of what you think about the ridiculousness of these moves and this uptrend and the job reports and all that stuff. So this is the reality, is what the price is actually doing. So I did not take any of these trades, and obviously I kicked myself because I wasn't going to jump on this. I wasn't going to jump on this big drop right here, which I'm glad I didn't, because I probably would have bought in or sold in down here, and then you would have gotten a tiny little bit of profit. I mean, unless you just took a chance to go short before the news came out, but that's always highly risky. So, anyone that maybe got in short up here, awesome, then you're loving life, assuming that you got out, because if you didn't, you had about 1 hour to your advantage, and then things have quickly reversed back against you. So hopefully, if you did get in up here, you took your profits and got out, because otherwise you've given it all back and now are took a loss. So anyway, so we'll see what happens. But I didn't trade this at all on either market. So it is what it is. So let's talk about oil briefly. So yesterday, again, I took this trade yesterday as I made on the video, got out down here. You can see it's continued down after the overnight session. We've continued down and basically, extended the losses from yesterday. And we're trading back down around 72.50. Now, I didn't take this today either because, one, I was really just paying attention to the indices. Two, I wasn't really, I was out this morning for a little bit. And three, quite frankly, I'm looking at all this in here. Now, obviously, this was in the past, but you can see all this chop and trash in here. I had a feeling that once price runs into this area, it's going to get tied up. Now, whether it bounces off here and starts going back up again, or whether we eventually break lower, either way, if you just look at this is a 4-hour chart. There's some pretty big ranges of trash in here. And, I have this box drawn here that kind of shows, some of the closer lows, and this is back around the $70 price. So I wouldn't be surprised to see price come down and retest this area back around 70. But I'd be stunned if it goes much lower than that, just with the fundamentals and with, still we have a lot of tension in the Middle East and things are quiet right now, but that could change in a heartbeat. Hopefully it doesn't. But, if that happens, then you'll see oil skyrocket. But for now, things are kind of in a lull. So, and we're heading out of, winter demand, at least in the futures market. And, oil production has been pretty strong. So prices, there's really nothing fundamentally to prop up these highs that were made. So it's come back down. But again, into this area here is a little bit problematic for me personally, to trade into this zone because, while it could still come down a couple more dollars, and that's an opportunity on a shorter time frame, beyond that, I'm not too confident. So this is the area I'm looking to target if I do decide to trade this thing short again, which won't be today because it's just too late now in the day to do anything with this. But so that's oil, and that's really about it. I do have a short position in soybeans. This is actually the May contract. I've kind of pushed forward into May, although I could stick with March. So this is on the short time frame, so the candles are really choppy because there's not a lot of volume being traded here. But you can see I took this short this morning, and this is my take profit down here. So it's getting close to that. So I'm going to keep an eye on this. I'm hoping it tags this take profit here shortly, and then I'll be out of that trade for the day. So it was really the only thing I took today. So that, obviously was not influenced by the NFP numbers. So, all right. So, that's about it. We're just going to leave it there. And like I said, I just try to do these in retrospect and talk a little bit about what I think will happen going forward. Next week in these markets, look, we're at all-time highs again here. If you look at futures here, there's nothing to the left in terms of overhead resistance for this to run into. So this is just going to keep going up, and as long as the bidder, the buyers are in the market. So until we really kind of definitively change direction, which would have to be a strong continued close, in my opinion, below the 200-day moving average on these higher time frames on, the 3 or 4 hour chart, to get sustained closes below here, would be the only thing that would tell you that this thing's reversing. Every time we see these big pullbacks, people think this is it, and then this market just comes roaring right back again. And, depending if I only tend to use a moving average now on longer time frames, but you can see that it's not breaking any of this long-term, support area. Even this move down, here that we've had, you really have to say this is the, the change of direction point down here. If you look at a 3 or 4 hour chart, this is the last place price tapped into before it went up and made these new highs. And so if this continues to make a new high here, which looks like it's going to, it's not quite there yet, then, you can move this. I'd probably move this box up to here, and we'll see what the moving average does. But still, as long as it holds above these areas, then we're in a bullish market. That's just the way it is. So, you have to continue to err on the bullish side here, at least in the long term. You can take short-term sells like I did yesterday, but that's just the way it is. So anyways, guys, so we'll leave it there. Any questions, comments, drop them down below. Smash that like button. Subscribe to the channel if you're just finding it for the first time. And, we'll see what happens next week. So I'm actually going to be traveling again next week for a few days. I'm leaving Monday. Won't be back till sometime Wednesday. So I definitely won't be making any videos in those 3 days. I'm not even sure how much trading I'll be doing. Obviously, I always keep an eye on things, but I'm probably going to be very light the first half of next week trading anything. So, but let's keep an eye and see where things go. And that's it. Have a great weekend, everybody, and we'll talk to you all soon.